First off, if you're not familiar with who these three are, let me help you out real quick. On the left, we have the most recognizable, Kevin O'Leary, who is one of the stars of Shark Tank and a frequent TV personality on CNBC. In the middle, we have Howard Marks, who is a co-founder and manager of the hedge fund Oak Tree Capital. And on the right, we have Charlie Munger, who is the chairman of Berkshire Hathaway and a longtime investing partner with Warren Buffett. Now, this may seem like a random hodgepodge of investors, but I chose these three in particular because of what we can learn from each of them. Whether that's sound advice wrapped with entertainment, extremely valuable insights into core principles of investing, or a wealth of knowledge from decades of experience, I believe all three of these have something to offer that will make you a better investor. Now, the first one you may be curious about, Kevin O'Leary. He has some shock value with some of the stuff he says on Shark Tank, but behind all of that TV persona, he is actually an extremely disciplined investor. And if you follow this channel, you just might be into dividends, which Kevin O'Leary is also very, very into.
Look at companies that don't pay distributions, don't return capital, how risky they are. Take a GoPro, for example. I'm not just picking one company, I'm just giving you a good example of a company that basically has lost 70% of its value, never returned a dime to shareholders. Or how about a company that's been around much longer, Yahoo? Never paid a dividend. It's never made money for anybody except all the CEOs that have gone through there and got whacked. It's just a rotating door where management extracts capital, never returns any to shareholders. And I look at that and say to myself, why don't I just avoid that altogether? If it doesn't pay a dividend, I know that 71% of the time all the returns come from dividends. Why should I own a stock that doesn't pay a dividend? And I never will.
Even when I look at my own portfolio and my personal investing strategy, it syncs up with Kevin's pretty closely. Not only do I focus on companies that have dividends, but a huge focus is on cash flow. And if you follow Kevin, you know that he looks at companies that have strong cash flow and balance sheets and are able to disperse extra capital. That's a huge focus of his.
Here's how I think of my money. Soldiers. I send them out to war every day. I want them to take prisoners and come home. So there's more of them. Your army, every soldier dies that you send out every day. When you have no soldiers, you're wiped out. That's the game of life. Stop this madness. I am so out.
All right, that's enough of Kevin. Next up, we have Howard Marks, who I honestly think is a genius, and what he's most known for are probably his memos.
Hello, I'm Howard Marks. It's after hours here at Oak Tree's Los Angeles trading desk, but this quiet room wasn't so quiet a few hours ago. The question posed in my latest memo is, in the future, will it be like this all the time? In short, will we be investing without people?
Howard Marks' memos are incredibly insightful. The one he's talking about in that clip, he goes over the rise of automated investing and money being poured into ETFs. He talks about what he believes are the impacts of what that will be. In another memo, he goes over what he believes are the 7 worst words in the world. Quote, too much money chasing too few deals. He describes the current market as one that has low unemployment, high earnings, optimism, which has led to high asset prices, and those high asset prices have led to investors taking on greater risk. He believes in staying invested, but doing so with caution. His advice is primarily why my portfolio is gauged more to the conservative side than most.
The economy has gone upward for almost 10 years. The markets have gone upward for almost 10 years. The too much money phenomenon is certainly underway. It would be a mistake to have as much risk in your portfolio today as you did 2 years ago, 5 years ago, or 10 years ago. You have to acknowledge that. I use the term calibrate. Today is not the time for max risk, full risk, or for, in my opinion, evenly balancing offense and defense.
Your portfolio should be skewed toward less risk.
Yes, but not extremely.
I can't stress enough how awesome Howard Marks' memos are. I will warn you, they're a little on the heavy side, but I think it's worth the read. The question he raises and the points he makes are extraordinarily insightful. In his latest memo, Political Reality Meets Economic Reality, he briefly, at the start of it, goes over the effects of the tariffs, but the majority of the memo addresses the growing populism of anti-capitalist sentiment and the risks that this pose. He brings up so many good points and so many good questions. If you're at all interested in the current debate over socialism or capitalism going on right now, I highly recommend reading this, and we'll link it in the description.
Bitcoin is worthless artificial gold, which, if it succeeded, would facilitate a lot of illicit activity. Now, that is not something I think the world needs.
Now that, of course, is Charlie Munger, who's honestly kind of hilarious. Warren Buffett refers to him as Colorful Charlie whenever he says something outspoken like this. At the time of this clip, a single Bitcoin was worth about $8,800. The current price today is about $3,600. That's around a 63% decline in a year that has passed. That goes to show, even though Charlie and Warren are very old, their deep wealth of knowledge and proven investing principles are still applicable today. I love Charlie because he doesn't just say the truth, he shouts it. He literally called Valeant Pharmaceutical a sewer. That's the pharmaceutical company, if you recall, that continually purchased smaller companies and then jacked up the price around 700%. Martin Shkreli did a little bit of that, but Valeant was the one that really did that on a large scale. Charlie Munger was so against their business practices and the way that they operated that he said that it was an insult to sewers to refer to Valeant as a sewer. He was so harsh on Valeant that Bill Ackman, the man there on the picture on the right, actually contacted Charlie through email asking him to meet with him so that he could reevaluate his statement, which of course he never did. Well, I hope you guys have enjoyed this little highlight of 3 of my favorite investors. I really do believe following them will make you a better investor yourself. And I appreciate everyone that has liked my videos and subscribed to the channel. If you haven't already, be sure to share this video and subscribe to the channel so it can continue to grow. And thanks again, guys. I'll see you next time.